This episode is brought to you by Fidelity Crypto. You'll hear more about them later in today's episode. Nothing said on Empire is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the companies, funds, or projects discussed. All right, everyone, welcome back to Empire. I'm very excited about this one. Really excited to have the Chief Security Officer of Coinbase, Philip Martin, as well as Alex Pruden, who's the founder and CEO of Project 11 with us. This is going to be the security podcast, but even maybe one step deeper than that. I don't know if you guys have been reading Nick Carter's post about quantum and Bitcoin, and we're all screwed here. And I wanted to bring the two smartest security people that I know on to actually figure out what we're going to do about quantum and Bitcoin. So yeah, Philip, Alex, welcome here.
Thanks for having us.
Great to be here.
Yeah, excited about this. I think maybe the best place, I'm going to ask like a ton of really dumb questions in this episode. Just be prepared because I'm way out of my depth talking about quantum. But I think I'd love to hear just from you guys about why is this the moment in time? We're recording this April 2026. Like, yeah, quantum. And then now it feels like boom, like we're walking. I think Nick said Bitcoin Core is sleepwalking towards collapse. Like, why is this the time period when everyone is starting to talk about this?
I can take maybe just the first pass. I think the primary reason is that two papers came out a couple weeks ago now. One out of Google, so Google Quantum AI Lab, and so they're building a quantum computer. They also have folks that work on cryptanalysis, namely a gentleman named Craig Gidney. So this lab came out and basically said, hey, if you look at targeting elliptic curve cryptography, specifically, past kind of work in quantum and cryptography focused on an older crypto system RSA. But Google said if you target ECDSA specifically and you kind of layer on some assumptions about the type of computer we're building, then potentially this is a much more imminent threat than we potentially first thought. And there's a bunch of impacts across the cryptocurrency space. I think this was actually one of the more notable parts of this Google paper was, it was like a 1/4 quantum computing paper and a 3/4 survey of the digital asset space and all the various ways things were vulnerable, and really explicitly said, hey, there's an urgency to migrate to post-quantum cryptography. That was paper one. Paper two, that was independent of this, was a team out of Caltech, which, really it was like the S tier level physicists, founded, the company's called Oratomic, founded by folks named, that gentleman by the name of Dilip Blovstein, who's done a lot of really seminal work on quantum computing, as well as John Preskill, who's probably the most prominent living American physicist out there. So they came out with a paper that said, hey, Shor's algorithm may be possible with as few as 10,000 neutral atom reconfigurable qubits. And just for context, like the prior kind of state of the art was between 500,000 and a million was what people thought we needed. So you just took basically the bar that you had to clear to potentially break public key cryptography down all the way to 10,000. And, just for context, IBM has a system that's around 1,000 qubits, and they've entangled, kind of systems up to around 7,000 qubits. So you're kind of like an order of magnitude, at least in terms of the number of physical qubits you would need to potentially be cryptographically relevant. So those two papers kicked off a press cycle that now I think suddenly everyone is waking up to and like, oh man, we should figure something out here.
Yeah, I think that's right. I think, the interesting thing about this whole space is everything is so speculative, right? I think Alex very correctly said a bunch of like, it could be, we think that maybe, right? And so that leads like reasonable people to have wildly divergent views about what's true in this, in a way that I think I've rarely ever seen before.
Maybe before going too deep into Bitcoin, can we just talk about there's the system that cryptographic system that everything runs on, including our financial system. And it seems like that is kind of we've kind of run on this for decades, and it seems like that is at risk. By the way, not just with quantum, but Santi and I have been talking about Anthropic and Chat, OpenAI, and what's happening with Mythos a little bit on the podcast. And so it seems like there's these two threats, quantum and AI. Maybe before going too deep into Bitcoin, can you guys just what's your mental model for how you're thinking about just the financial system and the security of the financial system kind of getting upended right now?
Yeah, it's not even the financial system. It's modern cryptography is what's at threat, or at least a class of modern cryptography is what's at threat today with quantum computers, which is largely led to the I mean, I don't want to sound hyperbolic, but the ability to use the internet safely, right, rests on modern public key cryptography, which quantum computers, which a cryptographically relevant quantum computer, which is the term that we use to talk about this, um, would break fundamentally, right? That's financial systems, that's government, that's basically everything. And Alex talked about cryptographic agility a second ago, which I think will be important moving forward. But the thing of it is, a lot of stuff that's built today is not agile and can't be agile, right? You look around your house and how many IoT devices are there? It's an open question, right? Is that stuff, are the chips in those devices going to be able to use post quantum algorithms? Don't know. Maybe yes, maybe no. Are the manufacturers going to actually upgrade them? Don't know. Maybe yes, maybe no. And so this really truly, when it comes to pass, will be, Y2K would be underestimated in my
Wait, Philip, I have a dumb question here. So we have all these devices, like I'm recording, I've got this microphone, I've got the computer, I've got the IoT devices, maybe someone has Amazon Alexa. Do you have to replace every single device? Is this a hardware upgrade or a software upgrade that will happen?
Depends how they implemented it under the hood.
Okay.
It could be either.
Do you have yeah, Alex, go ahead.
Yeah. Well, I wasn't going to make a comment on the hardware or software. I was just going to make a quick comment on the financial system point that you brought up. Look, I think it's true that there's a lot of risk to the broader financial system, but that uses the internet, right? Like, the vulnerabilities are kind of more around like how the financial system is embedded inside of the internet, basically, largely, not entirely. I think the one distinction between the broader financial system and what we're going to talk about, which is blockchains, is that, these systems already rely very heavily on trust, right? So there's like a trusted set of parties that kind of maintain the ledger, so to speak, or data. Like, so in theory, I think an attack could be very disruptive, let's say on Swift or something like that. But like in theory, just like a bunch of important bankers sitting around being like, hey, whoever did that last entry, erase that and like, let's go back one, and so I guess reverting, or preventing, an attacker from being able to profit from an attack on the broader financial system, I think is easier, or maybe stated more clearly, it would be harder, I think, for someone to profit from an attack on the broader financial system. Not impossible, just harder, as opposed to blockchains and digital assets, where it's like the authorization to move funds is entirely cryptographic, and it like has to be one factor, right? Like if it was multi-factor with trusted parties, then it's kind of hard. I mean, it's like less decentralized, right? I mean, that's kind of maybe an overgeneralization, but I think sometimes people overemphasize or kind of are hyperbolic around this, like, well, if a quantum computer comes out, like the world is going to end, like everything is going to fall down. I don't necessarily think that's true. Everything has to migrate. By the way, banks are already migrating, as is the broader internet. Like 50%, I can't remember, Philip may know the exact number, somewhere around half or a third of all internet traffic is already secured using hybrid cryptography, which implements PQC. So like the ball is rolling. And I think it's blockchains are kind of in this unique position where they're super reliant on cryptography for their security, and migrating to a safe form of cryptography and or mitigating an attack is just harder.
I mean, I guess on that point, I mean, as we're recording, there's been a spike in DeFi hacks that is unrelated to Bitcoin. But if you look at, they're not all the same. But this latest one seems like perhaps some stuff could have been avoided if you had time locks or if you had a bit more rate limits and stuff that I guess seems a bit obvious in hindsight. But one of the things that we in crypto, you see a lot of builders be extremely philosophical and ideological and perhaps not too practical. The question is more around, I think, Bitcoin. This is the heart of the discussion of this pod, but how would you describe the sentiment out there around, actually, you talk about the traditional internet moving now 50% to kind of front this, or where are you in terms of sentiment of like, how's the community adapt? Like, is the alarm fully being sounded and are people reacting to this, or are they not moving as fast as you'd want?
Yeah, my opinion, and Alex may have a different one, is it's mixed. Um, I think there are, we can talk about Bitcoin specifically, although obviously this impacts the whole sort of spectrum of blockchains. Some blockchains are moving quite quickly, right? There's at least a couple, I believe, that have testnets up, that are using post quantum cryptography. Almost everybody has a roadmap, with the exception, I would say, of Bitcoin. And I think there are a broad spectrum of opinions within the Bitcoin community on the timeline, as well as the risk of quantum computers. I think Nick Carter has done some good stuff on this, that he's put out around sort of looking at where everyone stands to the extent it's possible to see.
I have nothing to add other than to say that I think Bitcoin, one of the reasons I think it's a hard topic in Bitcoin, and I'm sure we'll cover this more later, is there's this philosophical issue at play where, a lot of the older UTXOs, like Satoshis, are thought to be irrecoverable. So like, Satoshi may be dead. So it's okay. So all that value is just, what do you do with it? Do you basically prevent a quantum computer from stealing it by burning it? Or do you just let the quantum computer take it? And they're kind of like, there's these two things about Bitcoin where that's like a really deep philosophical divide. One is this concept of Bitcoin as digital gold, right? So it's like the integrity of this supply should not be violated. So like, theoretically someone could just go and steal and then sell on the open market, a tenth of all gold. Like that's probably gonna have a major price impact, impacting people's confidence in the future ability of this to be a store of value. So that's like one aspect. The other aspect though is Satoshi, right, created Bitcoin as a direct answer to what he saw was, corruption and mismanagement and the broader financial system. And this property rights, like not your keys, not your crypto, was a deeply rooted philosophical thing. Look, I think this has made the conversation in Bitcoin in particular. Bitcoin is kind of unique in this way. It has this uniquely large amount of value and it's been around the longest. So this is like a uniquely difficult conversation there that makes the conversation harder. And I think makes people a little bit slower to want to recognize this is a potential threat.
This episode is brought to you by Fidelity Crypto, a platform built in-house with the same discipline Fidelity applies to everything, so you can invest in crypto confidently. Trade crypto backed by industry-leading security. Get started at fidelity.com/crypto. Crypto is offered by Fidelity Digital Assets NA, is not insured by FDIC or SIPC, and includes risk of complete loss. Fidelity Brokerage Services, LLC, member NYSE, SIPC. Yeah, let's go down the Satoshi rabbit hole. So to tee up this conversation, there's, what's Bitcoin's market cap? Like 1.5 trillion today or something like that. Satoshi coins are like roughly 10%. So I think the question in the quantum land is, the Satoshi coins are, a lot of the Bitcoin might get upgraded. Like there might be a hard fork and there might be, the Satoshi coins might get upgraded, but most of the Bitcoin will get upgraded, but the Satoshi coins maybe don't get upgraded. So then there's like this $150 billion pot that people can attack. It's like the biggest pot of money on the internet that you can go attack today. So the question is like, what do you do with these Satoshi coins? Philip, is that kind of the right framing?
Yeah, basically. And I think Alex is right that there are basically two choices, right? You lock them in some way, or you leave them up for grabs. And there are a bunch of different nuanced approach that people have suggested within those two buckets, right? Lock but recover in some way if you can prove some knowledge, that kind of thing. And neither choice is like obviously like the clear winner.
Let's go deeper. What do you guys think should happen?
Oh man, you're really just teeing us up to get flamed by
I know, seriously.
Community. Right. Caution. No,
Nick can't take all the heat, so
go for it, Philip.
Look, I'll just preface this is like Philip's personal opinion, right? This is not Coinbase's view on any of this, but my personal opinion is it doesn't make sense to me that we would have that much value up for grabs by the first person who can break a key with a quantum computer. I think we have to do that in a way that respects the ability of the people who own those coins to actually come back and claim them if we at all can, right? And And so that may be there've been schemes proposed on like proving access to seed phrases. That I think there are some possibilities in that world. But my personal vote is I think we have to prevent a quantum computer from stealing it, and then we have to make some way for those coins to be able to be brought back to life in the event that the holder is actually able to recover them.
Yeah, maybe I'll preface my answer by just making one or two points, and then I'll give you my answer. But I think first off, it's not just the Satoshi coins that are vulnerable, right? And you said something very important a minute ago that I think is worth clarifying. You said, coins will get upgraded. I think this is the right verb is act. It should be the active form, right? You must upgrade, right? Not your keys, not your crypto. So anyone with a UTXO today, like to be quantum secure, you must like do something, right? So this is the issue. It's not that like for whatever reason Satoshi's keys are like hidden or UTXOs are hidden behind some like wall of fire. It's that we think Satoshi is dead, so they just are not going to be able to do the thing themselves. But to be clear, even though Satoshi's supply roughly equates to about 10% of the overall, and there's spread across many UTXOs, by the way, there's about 35% of all Bitcoin today that has exposed public keys for a variety of reasons. And so, potentially those are at risk too. And there's some other exchanges out there that do not have as good security practices as Coinbase, as I would say, and that have left a significant amount of value that you can actually, by the way, if you want to see like all of the various Bitcoin that's at risk, we have a risk list on project11.com where people can enter an address or even just like scroll through like the top folks. Right. So anyway, so there's a lot of value, and potentially people have to migrate it. To Philip's point, okay, what do you do? Satoshi's not going to migrate. So what do you do? Look, my view is there's going to be a fork here. I think to me, it's inevitable because these philosophical issues, I don't really see how you resolve them. And, this forking is a mechanism by which blockchains potentially deal with this divide. And it's not the end of the world, right? We had Bitcoin Cash, irreconcilable divide between two camps around block size. I think it's not unreasonable to expect this will happen again. And ultimately the market will determine which of those is more valuable, or maybe both of them have some residual value. I don't know, but I think whatever I think it's going to ultimately just end up as a fork. I would be surprised if it didn't.
Who are the major players here that could in the conversation, right? Because 2017, we've been here before, kind of like difficult decisions in the Bitcoin network, as far as I can remember. Who are the major players here that matter in the conversation?
I'll start with this one. I think, look, there's a historical group of core devs, which, just to be clear, has kind of evolved over time. So I think if you go back to 2017 and the conversations of that era, the characters who participated in those, like many of them have moved on. So there are still some core devs, obviously Adam Back and Blockstream, and Greg Maxwell's around, Matt Corral's around. Like there are some folks that have been around for a while, but there are not as many as people would probably expect. Core devs from the era of 2017, but the core devs certainly matter. I think, there's obviously institutional adoption of Bitcoin is much, much higher than it was 10 years ago. So these institutions obviously have skin in the game, right? So they certainly matter. And I think those are probably the two primary groups, although maybe I'll add the third, which is
miners.
So miners, and maybe miners ultimately I think are going to do what they think everyone else wants. But I don't know. Maybe that's not true, but that's sort of my take. And I do think there's like there are loud members of the community that are not in either of those three categories that I think are kind of spoilers for doing something pragmatic. And I think, and to be charitable to them, they're defending what they see as the core principle of Bitcoin, why they signed up to hold it. So I would maybe just say like the long tail of community members who really believe in these deep principles of Bitcoin, or one way or the other, just have an opinion.
Which, by the way, Alex, didn't they win the 2017 block? Like they kind of helped win the block size wars. Like they were kind of outnumbered in capital, but they were kind of I don't know if that's the right framing on history, but
I mean, you could argue that, right? And certainly the miners that are, well, like the narrative is like the miners and like, big bad corporations got together and tried to increase the block size and the community rose up and won. That's like, I think the popular narrative for obvious reasons in that community. But yeah, no, look, I think it's not, their voices are probably not to be underestimated. And again, this is why I think you can't rule out the possibility that ultimately there could be a chain fork and then the market will just resolve it at some point. I don't know.
Yeah. So is it fair to say it's the economic nodes, it's the exchanges / custodians, the ETF issuers, and the balance sheet holders, like the micro strategies, are going to make this decision? Is that right?
Uh, uh, well, I'll answer, and then Philip, you can decide if you want to take that as well. I think, look, I think they're going to make a decision around what they want to do with their assets, and that decision may, given how important stakeholders they are, that decision may influence which what everyone else does. But I don't think necessarily no one can decide for Bitcoin, right? So but I do think, look, if you look at the pure amount of capital, it's inarguable that the economic nodes have the most to lose potentially. So I think they're definitely going to be involved in this. And I think this is a different thing. Maybe the last thing I'll say is, compared to Bitcoin Cash, there's kind of like that. In that case, it was kind of like, like we're getting like everyone gets two of whatever they had before. So it's kind of like only upside to do both. Whereas here, I mean, there's some potential real security implications. So I don't think it's quite as clear cut that everyone's just going to kind of go one way or the other. I don't know. Philip, maybe.
Yeah, no, I think that's exactly right. I think no one can make a decision, right, and make it stick. I think it'll be a community driven process. But I think Alex is also right. Like the economic nodes have the most to lose, right? And so I think they are going to be, and I think we've started to see this, the ones who are most interested in driving a solution.
Yeah, to me, it feels very obvious what's going to happen, right? Where there's going to be a freeze camp and a no freeze camp, and the freeze camp is going to be the institutions and the ETF issuers and the exchanges and the custodians, because they can't tolerate client asset, like they can't tolerate this risk, right? And then there's going to be a no freeze camp, which is going to be the maxis and the community and the ideologues, and which is great. You need both sides, but yeah, no one can choose. But if Coinbase says, hey, all of the Bitcoin that's held at Coinbase is going on this chain, then I mean that's basically your decision. So Philip, I guess I know this is Philip's decisions and not Coinbase's. You're speaking for Philip, not Coinbase, but like, how do you guys make this decision at Coinbase?
It's gonna be really tough. I think we're ultimately going to do right. We're here because of our customers, right? We're ultimately going to listen to our customers, our stakeholders, and weigh that very, very heavily. I think that either way, once there's a viable upgrade path, we'll obviously upgrade all the keys that we have to make sure they're using post quantum cryptography. But I think this will be something that we listen closely to our customers and stakeholders on.
I'm sorry, guys, but this doesn't sound and I know we're here talking about this. This does not seem controversial at all to me. If you're Saylor, BlackRock, Coinbase, to your point, Philip, you're going to do this because it's sort of like the asymmetry of not doing anything and having someone steal Satoshi's coins is catastrophic to the network. To your point, it's not just Satoshi's point, Alex. It's, up to 30% of the supply. Yeah, good luck. Like not doing that is a Talib turkey on Bitcoin. And it's probably attach any probability of that happening over the next 5 to 10 years. And you still get to the economical rational decision. If we're all here talking about game theory of upgrading now, question is, who is going to put forth this upgrade? And is that maybe more of the nuance? Like, do we agree that this is the best upgrade, or are we going to field a couple of proposals? I just don't know much about what's going on under the hood.
Let me steelman it. So I think everything you laid out was very logical. Let me steelman the other side a little bit from a maybe slightly different perspective, not as philosophical perspective. Satoshi's coins are kind of obvious, right? We think they're dead, but about 15%. So Satoshi's coins make up about 2/3, according to Chainalysis, of the lost coins. How lost are the lost coins? Is kind of a question. And so, like, when you cross that, so Satoshi's coins, okay, maybe fine, but like again, that only accounts for about 1/3 of all the coins disposable of keys. So then like, where do you draw the line on confiscating effectively Bitcoin that hasn't moved in a while? Right. Maybe
This is the way to wake them up, right? I mean, if we want to truly, like, I mean, if they're not dead or their hard drives in a landfill, like, this is actually a really fascinating way of understanding how many of these Bitcoins are lost or will come up, and maybe we'll find out who the real Satoshi is.
But now imagine you're someone working on this. Let's just say the core devs, such that they are, all come together and they said, we believe in this. We're going to do this. And there's a pull request. So BIP 361, actually, there's a BIP for this now. So let's say, I won't name his name because he's getting enough flame on X. But the author of BIP 361, let's just say he is the person to press merge, right? So it's like pull request is merge, and and miners all agree, and so everything happens for this, basically this freeze to happen, right? And someone wakes up someday and said, hey, my Bitcoin are no longer accessible. Do they have a legal claim against the author of that BIP or the person that pressed the button? I don't know, right? There's a lot. So this is kind of like, and so then, so people have talked about, okay, well, there needs to be a time frame. Let's give people 10 years. That's all fine, of course. But, 10 years from now we're talking about the real risk that potentially a CRTC exists, right? So I think the challenge is not so much the Satoshi's coins are kind of the straw man. I think it's more of like on the margin, who is a long-term holder and who just lost their keys. It's unknowable, right? And I think that's why it's tough. To your question of like who does it, I mean, Bitcoin is also unique in the sense that there's not a foundation associated with like upgrading it, right? There's kind of this like never-ending political battle of who gets to be a spokesman for Bitcoin. If the New York Times is to be believed, Satoshi Nakamoto, Adam Back, may be working on something, but others may have ideas. And so it's a bit chaotic. And there have been a number of proposals over time. We outline many of them on our blog. We have a whole like rundown. But this has been talked about for years. I mean, the question is who galvanizes. In my opinion, the relevant question is who is able to galvanize the effort and the resources required to take this from an idea to a reality, right? Because, Santi, as you know, I've been part of a team that's launched a layer one blockchain. There's like a big gulf between like the white paper and the thing that is secure, that can secure trillions of dollars. And I mean, to me, right now we're in the idea phase, and there are people that have ideas, but I think we're still pretty far from someone saying that they're going to do it. By the way, though, that's true of all networks. Philip mentioned, hey, there's people who have roadmaps. Those are all great. Very few people, there are a handful, but very few teams have actually gone and done any concrete steps into making the ideas realities. Although, of course, everything has to start as an idea.
Yeah, and it's very interesting because there's a whole separate, we haven't talked about this at all yet. There's a whole separate set of problems after you upgrade to a quantum proof signature scheme. For example, these signatures are much larger. The smallest of the larger ones is, I think, 10 times, if I remember my numbers correctly, the size of the current signature of an ECC signature. That's going to impact throughput, or it's going to take off another block size debate.
By the way, you mentioned, or I think Jan or Santi wanted to, you mentioned like the DeFi hack. That 10 times X signature that Phil's mentioning, like that's called Falcon, or FNDSA is what it'll probably be standardized as. That is like Google wrote an entire blog post about the nightmarish complexity of implementing that. And so like, you think DeFi hacks were hard now to prevent, like wait till people are trying to roll something like that into production. So there's like a whole, it's as Phil correctly highlighted, we're going into a world where there's a whole bunch of painful trade-offs that these protocol teams are really going to have to figure out how to do.
I want to go to DeFi and stablecoins in a second, but one more Bitcoin question for you guys. Is there a third option here? Where let's say if, so it sounds like both, okay, Philip, you kind of didn't fully give, it sounds like, Alex gave a very strong view of like, we should freeze the coins. And I think you're, it's maybe more in that, not in that, you are in that camp, Philip?
I think Alex didn't give his view on whether it should be frozen or not. He very skillfully sort of tap danced around that
one. Okay, you dodged. Okay, so you both dodged. Anyways, we got the freeze and the no freeze camp. Is there a third option, like, or would your guys' view on this change if, let's say, I think what everyone's scared of is like, is China or like North Korea like gonna, win the quantum race and then like take these coins? But what if you guys knew that, let's say, Coinbase had developed a quantum computer, or like the US government had developed a quantum computer and would get the Bitcoin coins. And now you kind of get like court appointed receivership of how many Satoshi coins are there? Like 2 million or like 1.7 or 1.8 million coins. And this turned into the strategic Bitcoin reserve. And they were like, we're never going to sell it. Is that option 3? And would you guys be okay? Would you guys be like, oh, interesting, I'm kind of down with that?
That's kind of a sci-fi option, if I'm being honest. That's I think that's pretty out there in terms of reality.
I think Nick has written that. He wrote a great, by the way, a really fun short story where he like outlines this. Also, Kyle Samani, formerly of Multicoin Capital until he retired, I think he actually also tweeted exactly this about a year ago. I agree with Philip. I mean, there's just so many what ifs, right?
Yeah.
I do think, look, if you're going to pin it to me and say, hey, what's the third option that I think is viable? Look, one other issue that people talk about with Bitcoin is what happens when the security budget runs out and you run out of engine. So like 1/3, it's kind of a confiscate option, but with a less, I mean, maybe less confiscatory, is like you kind of roll Satoshi's coins into the back end of that. I mean, to me, that's like, if you're going to confiscate, that's probably the best, or, some that is maybe the best way, because then you at least buy yourself time for this other really controversial conversation. I don't know. It's like, that's maybe
are you saying the Bitcoin network is going to have stock-based compensation?
oh man, I'm getting enough as it is. Don't put that on me.
That is no, but so people should go listen to the episode we recorded with James Presswich, who I think has been probably one of the strongest advocates of like putting in front, like discounting to today the security budget question. But I hadn't thought about this, but it's quite an elegant solution where if in the window of statute of limitations, like you have like 5 years to claim, then you have that in treasury and then you disperse those to fund the security budget after all the emissions kind of dry up, which is actually a really elegant solution. What probability do you ascribe to that mechanism actually going into production?
Probably low, mainly because it's like, I think this is just a huge controversial rat's nest. And I think when the fighting is all over, people will just be happy to be done with like whatever simple thing. So I think it's elegant, but I think it may just be too much for people to accept all of this in one change, right? You're already asking them to accept a lot of changes. And so I think that the lowest, I think it's relatively unlikely, but I agree with you. I think it's a somewhat elegant solution.
One follow-up to this, as you think about, so say this is actually viable and gets traction, how would you think about the period by which holders can upgrade? Because you kind of don't, at the pace, it's sort of a function of how quickly do you think we're going to get to quantum state, right? Because if it happens and you still have the claim period, that could be a risk, right, in and of itself, right? If you give 10 years, that's probably too much. If you give 5 years or 3 years, like, I guess, how do you think about that time frame?
I mean, I think it's going to be less about the time frame, and it's going to be more about how do you get the message out broadly and aggressively, right? I don't know. There's a big difference between giving 1 year and 5 years in terms of the number of people who are actually going to take action, right? But it's going to depend, and what we're going to see, because we always see this, is 90% of it will happen within the first month or something, and then there'll be a super long drippy tail of stuff that'll last probably forever, right? Or for at least as long as the window is open. The hard part is not setting the window. It's figuring out, hey, how do we get in front of everyone who needs to take individual action, right? For everyone who's not on exchange, or custodian or something, everyone who has a ledger in their home safe back in the corner somewhere, how do we make sure all of them know that they have to do something?
Mm-hmm.
Yeah, I think one important thing to note is we've kind of, in this whole discussion here, we're sort of baking in the assumption that that quantum computers are going to be so-called slow clock systems, right? And let me just quickly define what this is, because this was relevant to the Google and Atomic papers. There's this concept of a slow clock quantum computer and a fast clock quantum computer. And basically the idea, and one of the reasons the Google paper was potentially quite disruptive or potentially created disruption, was they posited that their machine could run in 9 minutes, right? So theoretically, the machine that they laid out, if we built it, they could run in 9 minutes. Why is that a problem? Well, Bitcoin's block time is 10, right? So you basically now have a situation in which, Santi, you're doing everything right. Your public key's not exposed, but now you want to send some Bitcoin to your mom or something like that. And now I can front run you in the mempool, and with a higher fee, right? And so and by the way, like once you get to that point, migration is kind of just going to turn into a giant bidding war of fees if you think about it. And so I think it's maybe just important to call out that I personally believe that the fast clock architectures are going to follow the slow clock architectures for a variety of reasons. However, I don't know. I think no one really knows how long that will be true, and that's really related to the question of how will quantum computing develop. It's kind of an unknown unknown, but certainly we have to ultimately add in all of this post-quantum cryptography for everyone to leverage. And then there's sort of like the additional question is like, for people who aren't going to move at all, and maybe that's the first thing that gets affected. But, there's both aspects to this, right? It's not just Satoshi's coins. It potentially is everyone's. It's just
Take a disciplined approach to crypto investing with Fidelity Crypto, a platform built in-house using over a decade of crypto experience. At Fidelity, you can trade crypto and stocks together, backed by industry-leading security. When you can see your accounts in one place, it's easier to make smarter decisions. Get started at fidelity.com/crypto. Crypto is offered by Fidelity Digital Assets, NA, is not insured by FDIC or SIPC, and includes risk of complete loss. Securities offered by Fidelity Brokerage Services, LLC, member NYSE, SIPC.
Impossible to know what Satoshi would do, but I would say he would probably want to see the network live. And I guess, are we all in agreement that if we don't do anything, there's a higher probability of Bitcoin fading into irrelevance if you don't do anything? So the action sort of dictates you have to address this, and you probably have to address this within 12 to 18 months.
Wait, Santi, why do you think it fades into irrelevance? I feel like I think the worry is like let's say China gets 10% of the coins, they dump the coins, and the price would get absolutely decimated. But I think it might be a setback, but I'm not sure fade into irrelevance.
Yeah,
I'll say it this way. Maybe I'll make this point. So I think it's will it fade. I mean, this is like we're kind of wargaming. I will say this. I think there are networks out there and protocols that see an opportunity to differentiate themselves by having this post-quantum cryptography first, and therefore Zcash is one that I think has leaned into this, right? And it's definitely a narrative that a lot of folks around the Zcash community are pushing, and I think there's a lot of truth to it, right? And there is this, and so there is a sense of opportunity, I think, from other protocols, and I don't think that can be denied.
But let's go to that extreme, Yana, because I actually think it's a good question. Like, what happens if we don't do anything? Because what is the status quo? Like, you don't do anything, 30% of, or what is it, between 10 and 20% of the supply potentially is someone get access to that and dumps it, or I don't know what they do. As soon as those coins move, it will have a wreak havoc, But once that is sold or whatever, like in my mind, I was just thinking that that's probably pretty detrimental to the network. But I don't know if it survives. Maybe it does. I hadn't thought about that. Philip or Alex?
Yeah, I mean, that's certainly the fear, right? There's two things. One, there's the obvious economic impact of selling that many Bitcoins. But two, like there's the impact on the trust of the network that I think is actually the threat, the long-term impactful thing that happens. And I think it's just really hard to know in advance what that impact will look like practically, right? How much trust is lost and breached there? Does this mean that, institutions can no longer touch the asset? And if so, what's that going to mean for the future of Bitcoin? I think that's all open questions.
So I think I was going to say, yeah, this naturally takes us to DeFi, because for me, these are protocols that have more freedom to upgrade, but they have, probably challenging issues in their own right. Some of them don't have as big of a security budget. They have way more surface area. I go back to like, is the solution, I guess, in all this discussion, given what's going on with quantum, with AI, stuff like Mythos, are you on the spectrum of super ideological to more permissioned? and more controls and guardrails, has your position changed one way or the other? Because I mean, Philip, you said something is important. You ultimately, Coinbase wants to protect your customers. Like no one likes to see these 200, 300, 400 million hacks. And every year we kind of have close to $1 billion in customer funds lost going to Lazarus. Yeah.
Yeah, I mean,
Go
I'll
ahead,
jump in quickly. I mean, Santi, you and I have known each other for a long time, and you may remember that I got interested in this space working in the Middle East with Syrian refugees. And I think an aspect of cryptocurrencies that really appealed to me and led me to want to work in it was the ability for people who didn't have any other option to be able to transact or save or transfer their value out of a war zone or out of a hard situation. I think so. There's this element of financial freedom that is just a really powerful part of the narrative that has brought many of us to work on this. That said, the freedom cuts both ways. As you just pointed out, it's also freedom for North Korea to fund its nuclear program. And there's nothing we can do about it because, again, if we wanted to do something about it, well, then we basically are going to revert to the exact same financial system that maybe excludes the people that I wanted to help. Again, this is a tough philosophical question. I think practically, though, ultimately we live in a world of nation states with sovereign governments, and I think it is a little bit optimistic, maybe overly optimistic, to assume that there's just going to be some supra financial system that every government just agrees to be a part of and doesn't want to try and control in some way, right? I mean, the U.S. government can throw me in jail if they want, right? And but the Ethereum network can't really do that to me, right? So I think for that reason, the reason that we all live in a world of sovereign nation states that can exert the rule of law over their borders, I think you're just inevitably going to see more permissioning. And what I think that also implies is you're going to maybe see some fracturing across geographical lines, for these various systems at some point.
I think that's right. I think that's exactly right. I also think that, you know, the thing that I've always been interested in is people are always going to write insecure code, right? It's never going to stop. And they're going to write insecure code. They're going to put it in a smart contract. They're going to toss it on a network somewhere. Where that starts to become a problem is where there's real value in that protocol, right? So how do we get better at not preventing people from writing bad code, but at flagging it when it gets on a network, but making it very clear to people who would interact with that, hey, you might want to tread carefully here, because this is whatever the problem is with it, right? It's vulnerable, it's new, it's untested, it's a rug pulling happen, whatever. Like that to me has been very interesting because I don't want to live in a world where we have a bunch of heavyweight permissioned DeFi blockchains. I don't think that it's the spirit of crypto, and I don't think it's fundamentally going to result in a better system than what we have today. But we do need to make sure that we can cut down tax. Losing $1 billion a year to these things is just untenable.
Might there be a nuance where, like, I think of crypto as lowering the barriers to entry and the switching costs, even though you are not fully permissionless, but you have some guardrails. I mean, look, like USDC and Tether both can freeze your assets, and the consumer just goes to where the most liquid coin or the coin that has the most brand. And there's a very small subset of people that actually truly care about philosophically. There's a whole subset of people that are unbanked and don't have access to the dollar. And, for better or for worse, the dollar continues to be the most sought after store of value. But if we agree that like digital systems like DeFi are interesting to people because they make it more accessible, you ought to layer in some way more protections, way more, because the end user is unsuspecting. It's just not as sophisticated, and but the threats are only going to increase far more than the end customer can catch up to leveling up their OPSEC. So to me, that always forces back to, if we really want this industry to grow, you have to assume that people are not going to level up their OPSEC and just assume that you're going to get hacked and then work backwards from there. And that takes you to a more permissioned system, right? Where you can, to your point, Philip, like you can freeze stuff, you can roll it back. And I hate to say it like that, but it all, yeah, Alex,
I
I
think,
hear you.
I think that, look, I think everything you said is right, but I think there's no one size fits all, right? I think there's a lot of, it really depends on exactly how much and who and what, and, how important. So, and I still like to believe that even, I mean, USDC is kind of a good idea, right? Or a good example in the sense that, yes, they can freeze your assets, but it's by exception, right? Like you have to basically be proven wrong. Like the way bank accounts work is kind of like you have to prove you're not guilty to get one, basically. Whereas like, to freeze assets, really these issuers, practically speaking, they do it if you are guilty. Look, that just, even though it seems like a small difference, I think it's quite important and impactful. And it's one of the reasons why you've seen stablecoin transactions really take off. And so, I think that's an example of how you can kind of have a maybe best of both worlds potentially. And then also, I just wanted to point out one other thing, which is that, we're still in the pretty early innings of people really interacting with finance via cryptography, right? And obviously the cryptography we're going to use is going to change, post quantum, et cetera. But like, I still think there's a lot of really low hanging fruit to improve security on the UX side, right? One great idea that the EF folks or folks from Ethereum came up with was this concept of account abstraction, right? Where you can basically just separate, kind of authorization at the chain level from authorization at the wallet level, and you can create much more complex authorization flows that, maybe are a bit, it's kind of that, maybe that part is like semi-permissioned, but, you get it. What you do for your grandmother could be different than what, like, someone who is an entrepreneur somewhere wants, I don't know, there's like a whole bunch of flavors of this, and it doesn't have to get baked in necessarily to each app and get baked into these various wallets. I mean, that's a broad generalization, but I'm confident that we will continue to get better as a space at this, or I'm hopeful maybe.
Alex, you guys dedicated a whole section to stablecoins, and Philip, I think you guys didn't focus on that as much, maybe more focused on just like the industry and Bitcoin in general. Curious why, curious how you guys think about stablecoins at risk here.
You're talking about the quantum on the quantum. Yeah. So I think it's, okay, maybe just first off, like as we move from Bitcoin to everything, I want to be clear. I think, I think every system has its risks, and I don't know, like one is not better than the other. I think there's just a different set of risks. Okay. So stablecoins are permissioned in the sense that, or maybe less at risk from a quantum attacker in the sense that money sits in a bank account. And so like a quantum computer can't like reach into the bank account and like manifest the dollars in someone's hand across the world. Right. So like the bank account is safe. What is at risk is potentially the on-chain stuff. What would happen potentially? Well, you could do the same thing you would do in Bitcoin or another network, which is like steal someone's USDT or something. But I think the real challenge for the custodial style stablecoins is these admin keys that we're talking about, right? Because I think those are potentially, they're definitely critical infrastructure and potentially could be nation state level targets, right? If you have a quantum computer that you're not even looking to steal Bitcoin with, but you maybe want to mess with the US financial system, especially as more and more dollars go on chain, that would be a way to create chaos. And given how much one of the big selling points of DeFi is you have, transparent contracts all over the place, interconnected, and, you take down, it's just like we saw with the Kelp DAO hack that you're referencing, Sonny. Like Kelp DAO bridge got drained, ripple effects across a whole bunch of other DeFi protocols. And I think you can imagine a world where, let's just say someone mints $300 trillion of USDT or USDP or something, and then breaks a peg somewhere. And then there's a whole bunch of ripple effects that ultimately maybe they won't have like real financial impact, but they could still be incredibly disruptive and still cause the loss of billions of dollars of value. So I think for those reasons, we think of stablecoin issuers as having maybe a unique, or maybe I'll say it this way. I think there's a special urgency for them to maybe consider how they're going to protect those keys from a quantum attacker. So yeah, that's my view. I don't know if Phil has more to add to that.
I think that's great and totally agree.
Yeah. Philip, maybe from the Coinbase view, what are you most worried about? This idea of Bitcoin, or just like you're running an exchange, or stable coins or DeFi, like on-chain stuff? Like, what are you most worried about?
Oh gosh. The answer is all of it. It's really the honest answer. For fundamentally my job is about protecting Coinbase and our customers. And so my focus is always going to go first to how do we make sure that Coinbase, from an internal systems and practices perspective, is ready for this well in advance of us of there being any risk. And then, as a person who's been in this industry for a decade, as of last week, I really really care that the blockchains evolve to get this right, and make good choices in terms of and good trade-offs in terms of not just the quantum algorithms they choose and how we deal with throughput, but also how we do all that while retaining the sort of the, the core philosophy that makes this space not just banks 2.0.
ZKsync is the bank stack of Ethereum. ZKsync's Prevedium is the only Ethereum secured platform that is purpose-built for institutions that demand privacy, compliance, and full control of their data. ZKsync enables financial institutions to thrive in the digital assets economy by launching and monetizing their own chains, tokenize real-world assets, build programmable markets, and settle cross-border in real time. Visit zksync.io to learn more about the bank stack of Ethereum and book a demo. I'm going to pull up didn't think I'd do this on this episode, but an Elizabeth Holmes tweet here. And I do want to get your guys' take. This is actually more on the personal side of things. I'm curious how you guys both almost treat your personal security. So Elizabeth Holmes, for people not watching on YouTube, said, delete your search history, delete your bookmarks, delete your Reddit, medical records, 12-year-old Tumblr, delete everything. Every photo on the cloud, every message on every platform, none of it is safe. It will all become public in the next year. Local storage and compute. And I think this was in response to, more like a Mythos level model being released, and maybe open sourced. But yeah, Philip, I'm curious to get your take on this.
This is hyperbolic.
This is hyperbolic.
Yes.
Why do you say that?
Two things. One, Mythos is a huge model, right? That requires an incredible amount of resources to run. It is not practical in the next 12 months, in my opinion, that we are going to have open weight models that is going to be runnable on a reasonable hardware. Now we will eventually, right? And so perhaps this is a question of timeline rather than destination. I think that Mythos models like it are going to favor the defense versus the offense. I think that's true because as a defender, I have so much more context on how my systems work than attackers do. And I think that's going to let me get a lot more out of that model than an attacker is going to get pointing it at an API endpoint and saying, go forth and hack. Right? And so as these models become more accessible, you have to make the assumption that there's a reasonable security team on the other side, right? So maybe the non-hyperbolic version of that tweet is make sure you know who your counterparties are, where your data is, and where you do not believe them to be good custodians of that. Yes, you should absolutely take action to remove your data from those hands.
Yeah, Alex, in your personal life, do you do things that maybe the normal citizen would say, that's a crazy level of precaution?
I mean, I used to work at a privacy protocol, so I obviously am passionate about personal privacy. And I do a number of things in my own life. I run a bunch of stuff locally instead of relying on services that some people would pay for from the cloud, for example. But look, I think the other reality is like read the Elizabeth Holmes tweet. Like, it's just not, first off, it's not even possible to like delete all of your data. Like, where do I even get it? Right. People have written whole articles about like these dark web brokers of people, I had a security clearance when I was in the military and like my fingerprints were stolen, I think in 2011 as part of the OPM Act. So I don't know, how do I delete my fingerprints that were stolen in 2011? I mean, it's just not, you just can't, right? And I think moreover, like we all lead increasingly digital lives, and there is, like, to Philip's point, I think it's absolutely right. You have to try and be responsible with who your counterparty is for your data. But I think there is also just some degree of acceptance that is like, there's some part of your identity that's going to get out there. And, and this is why I think multi-layered security architectures are just the best way to go, right? Because like theoretically, if you have a failure on one layer or a breach of one system, it doesn't break everything else, or it doesn't mean all of your accounts are therefore pwned, right? So yeah, and that's probably the most, I guess there's a practical advice here, for it's like multi-factor authentication, no one single, point of failure to the greatest extent possible, and then minimize, if possible, your exposure. But I mean, there's just no way you're going to avoid all of it, probably.
Yeah. Can I push you guys to get a little more specific on timeline? Because reading both your papers, I think you might disagree on this, right? Philip, you said, or the Coinbase paper called the timeline, I think you said like largely irrelevant, or it's maybe not, not as important. I do think you used the words largely irrelevant. Whereas Alex, you actually had these like, I think it was, 2029 optimistic case, and 2033 was kind of the base case, and 2042 was the pessimistic case. So can I push you guys to tell us, like, when does this really actually matter?
So the reason we say it's fundamentally irrelevant is because this process takes such a long time, and we have so little clarity that it doesn't matter to me if a quantum computer shows up in 2030 versus 2040. We have to start the work today, right? And so in that sense, like, maybe having a definitive timeline is better from a motivating people perspective, or it gives us a goal. But it's in my view, it's like trying to chase a date, sort of a red herring.
Yeah, I don't think I disagree much with that. I think part of the reason why we put timelines in our report is partially because I think it was to push people. Well, there's two reasons. One is I think people are kind of lazy a lot of times with their estimates for these things, and they're just like, it's 20 years away because it's always 20 years away. It's kind of like that, and that's like as deep as they ever get. And I think the reason why we put kind of these predictions in our report is just because we have these various, aspects of the analysis that we try and rigorously, distill into a real timeline. Now, that said, I think, there's a lot of uncertainty, as Phil mentioned. But I think there is like an aspect of wanting to just show people that there is a trajectory for quantum computing to develop. And I think the question is just how quickly will we go along it. Now, I think the other piece is, and I think back to kind of dovetailing back to Philip's point, there's a great framework that I really like called Mosca's Inequality. Michel Mosca is a quantum cryptographer at University of Waterloo. And one thing he points out is like, hey, look, you can't just consider the timeline for the attacker to get this capability. You have to consider the defender and how long it's going to take to prepare for that attack, right? And so you kind of have to like consider both things together. You can't just consider one in isolation. And exactly echoing what Philip said, I don't think there's, just to be on the safe side and not end up in a scenario where the attacker has this capability before we're ready. Like, we probably, just given the uncertainty here, it probably makes rational sense for everyone to start preparing today. It doesn't mean we have to panic, but it means we should start preparing.
Yep, exactly right. It's in my experience with this, once you start throwing dates around, you start to argue about the dates. Right?
Yeah.
And that it just, if again, fundamentally, it doesn't matter. The discussion is about what to do about it.
Yeah. Is there going to be a chat? What's the ChatGPT moment for quantum going to be?
I think it'll probably be in the simulation space, where we will see somewhere around drug discovery, something like that will be a use case where there's like some element of useful quantum supremacy shown, as opposed to the toy stuff that has been shown so far.
Well, I have a different take. Maybe we'll get an opportunity to disagree here. I think you're not going to see it. I think real quantum development, probably from this point forward, as it pertains to cryptographic relevance, is very likely to happen behind closed doors. The Google paper even hinted at this. In fact, their Shor circuit, they explicitly didn't reveal. They proved in zero knowledge that it had, it only consisted of X many operations. And they explicitly said, hey, this is because we don't want this knowledge to be out there for the world. If you look at the funding for these quantum companies, and you look, practically speaking, there is like, they sell services for like optimization, and there is like some stuff, but look, the vast majority of funds for this industry comes from the government and like DARPA. And by the way, the equivalent agencies around the world. I think the vast majority of money going into this space is for cryptanalysis. And I think Obviously, that as a capability is something that the funders of these things would ideally like to keep a secret for as long as possible. So it's not that I necessarily think we won't see evidence in the simulation space or otherwise that that there is progress, but I just don't know if we can count on it. I think there's also a lot of reasons to believe that it's possible that these thresholds get crossed effectively behind closed doors, and we don't ever know that they do.
Yeah, I agree. That's absolutely possible as well.
Just going back to something that we touched on, the security budget, it factors into the timeline a bit too. And I don't want to make this whole pot around that, but I mean, I think it's quite a bit of a threat. Like, how does Bitcoin continue in the absence of block rewards? And what's your guys' take on that?
My personal view is I tend to agree with you. I've always kind of believed that at some point, 50 years from now, when mining is just truly unsustainable, or there's so much like demand from data center, AI type use cases that obviously below a certain security budget, you're not going to have the same trust that you would want for a system that you claim is digital gold. And so I think the natural solution is just to tag on a tail emission, have inflation as a percentage trend towards zero over time, but maybe have a constant inflation. So that way there's like a way for miners to plan. I mean, that's kind of a controversial thing, obviously, in many parts of the Bitcoin community. I think ultimately it's not going to be for any of us to decide. Probably, I mean, unless this quantum thing ends up being part of that. But us leaving that, assuming that doesn't happen, then I think the future generations of Bitcoin are going to have to grapple with this. I think it's hard to say, but I kind of agree with you that ultimately the trust we have in Bitcoin is kind of dependent on the security budget. So either you have to assume that the coins just keep going up in value and the hash rate stays the same, or you have to assume that there's some continued emission. I don't know. You don't really get both. So I mean, however that happens, I guess we'll just have to wait and see.
Yeah, I don't disagree with any of that. I think the original theory was there'd be enough value in the fees at that point that with it would take the place of the block rewards. But I agree with the assertion that it's very, very important to Bitcoin's continued trustability.
As we tend to close out the episode, what is the best way for Bitcoin holders or to follow what's going on? And we haven't talked about Sailor. We've talked about like who matters here, but who are like the folks that haven't been as vocal that you think are going to play a bigger role going forward?
Well, in terms of how to sort of stay abreast of this, I don't know that there's any one simple answer to that question. I think what you're going to see from Coinbase going forward is a lot more about the sort of the quantum risk, both from a technical perspective, like the paper that we released, as well as from a non-technical perspective, and really talking across all the chains, right? Not just Bitcoin, because the whole ecosystem matters. But today, I don't think there's a place that we could just that anyone can just go and be up to speed.
Yeah, I think a lot more people are starting to talk about this, which is great. I want to particularly call out Coinbase and the work that Philip and his team is doing. I mean, they're leaning forward into this, whereas a lot of other exchanges are not. For example, they have this, quantum advisory council consisting of a lot of really impressive folks, and they're doing research that, on this topic, which is amazing. And I hope that encourages other stakeholders to do the same, because ultimately, if we believe kind of in the philosophy of decentralization, like to some extent, it's incumbent upon all of us to contribute. And so I think Coinbase has just done a really good job leading the way here. Obviously, Project 11 is like, this is our whole MO, is this whole thing. And so people can, certainly read up a lot of what we've written. And but yeah, I'm encouraged that the dialogue is starting to really take off, and I hope it continues to. And I think people shouldn't shy away from this topic. They should embrace about learning more about it. I mean, obviously, it's pretty dense, but I think it's one of the most important topics of our time in crypto.
Before we drop, do you think Satoshi coins move?
I think no.
I think maybe I'll say this. I know there are people building quantum computers that would be interested in potentially they view it as like lost treasure, right? There's like, oh, is this like lost treasure that we could get? And whether or not that's like a good legal theory, I think I think there is like discussion about that, and I think that's sort of why I don't think this risk is entirely just like in the abstract. I think people have to grapple with this as a potential tangible possibility, and so therefore we just need to account for that in our planning. So I don't know, but maybe.
Cool. Philip, Alex, thank you guys. Appreciate it.
Yeah, thank you.